You're listening to Africa Business Radio, where you get up-to-date insights on the Africa business landscape. Log on to www.africabusinessradio.com. Your favorite shows are available on podcasts. Download them on our website and mobile app. Africa Business Radio, towards a profitable Africa.
Africa is rising, they say, but Africa must rise with its people. There is no Africa without its people. How then do we harness Africa's wealthy people? Through social change and development. Social Conscience with NASA commits to Aspiration 6 of the Africa Agenda 2063 and the Global Development Goals. We advocate social change and development that will inspire the transformation that keeps Africa rising. Join us every week at 6:30 p.m. GMT +1.
Hello and welcome to another episode of Social Conscience with NASA, SCWN, and we're broadcasting live from the Africa Business Radio studio in Lagos. And I am, as always, your host with the most, NASA. So today was a bit of an emotional day for me. It was the final funeral rites of my aunt, whom I absolutely loved and respected. And for me, she was an amazing woman, very strong character. And because I lived a significant portion of my formative years with her in England when I was studying, I learned a lot from her. And she essentially formed a very rich part of the woman that I am today. And I'm truly grateful for that. She passed away in England in January to the dreaded coronavirus. And I know that she was a fighter. And I have no doubts in my mind that she must have fought ardently before giving in. And I pray that her gentle soul rests in peace. Her passing, however, reminded me of a story she once shared with myself and my cousins about a time when her mum, was my grandmother, was diagnosed in the early 80s with a brain tumor in Nigeria. And she was receiving treatment in a very well-known hospital in Nigeria, somewhere in the southwest at the time. And the Nigerian surgeon at the hospital, upon finding out that she lived in England, surreptitiously shared with her that the chemical solution that was being pumped into her mum's brain was just ink. And in truth, the hospital didn't have the right resources to look after her. And he would advise her to fly her to England, if she could, for better medical care. Suffice to say, my aunt was immensely grateful for this kind gesture. So, this was in the 80s, and in 2021, we're still battling with healthcare development issues in Nigeria, in addition to numerous development gaps. COVID, more now than ever, has highlighted the development gaps in Nigeria and Africa as a whole. And the question that keeps me up at night is, how do we close these gaps? How do we solve these issues? So you see, I shared this personal story to demonstrate how these seeming bigger issues trickle down to us as individuals. And as much as we continue to advocate and intervene whatever we can in the hopes that these issues are addressed, we must. The continent boasts of a young population, but without the right development in place, the dividends will only remain dreams and aspirations as far as I'm concerned. So on the back of this, the topic of discussion for today is Road to Development, Impact Investment Opportunities in Africa. Essentially, the idea is to explore and understand how impact investment can help address our development gaps on the continent. And joining me shortly is Meghan, the West Africa Director at Acumen, who has extensive experience in development and would be sharing from her wealth of knowledge and experience. But before I invite Meghan to join me, please stay tuned while we go on a quick break.
feels like the final football match between two soccer warriors. Oh my God, can somebody please tell me what the African formation is? Oh, it's 4-4-2, amazing. Cool stuff. That's just super amazing, isn't it? Africa Business Radio is doing 4-4-2 on the news with 40% Nigerian stories, 40% African stories, and 20% global stories. Now that's what I call a homegrown, hot-drinking goal! Go, 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 go! Let's go!
Welcome back. And if you're just tuning in, it's still Social Conscience with NASA on Africa Business Radio. And the topic is Road to Development Impacts Investment Opportunities in Africa. According to a 2013 UNDP report on impact investment in Africa, the 2008 financial crisis and the resultant volatility of official development assistance (ODA) inflows left governments of many African economies vulnerable to unpredictable fluctuations in available public expenditure. Studies have shown that declines in ODA lead to subsequent decline in public spending on development priorities, which could potentially jeopardize poor households' ability to access necessary basic goods and services. It's 12 years since the financial crisis, and the world has been hit by a pandemic that has left no sector unscathed. Is impact investing the road to closing the development gaps in Africa that have further widened due to the COVID-19 crisis? To shed more light and perspective on the topic for today, allow me introduce my distinguished guest, Meghan Curran. Meghan is the West Africa Director for Acumen, where she sets the strategy, oversees investing and academic programs, and leads business development for the organization's work in the region, based in Lagos, Nigeria. Meghan joined Acumen in 2013 and was leading the global talent function before relocating to West Africa in 2018. Meghan's commitment to this work is rooted in her experience as a Peace Corps volunteer in Guatemala, after which she facilitated microfinance loans for Grameen America. Meghan holds an MBA from the Kelley School of Business at Indiana University and a bachelor's degree from American University in political science. To my listeners, please feel free to weigh in by sending in your questions or comments to Africa Biz Radio, that's Africa BIZ Radio, one word, on Twitter with the hashtag SCWN. Welcome, Meghan. Thank you for accepting to have this conversation and to share from your wealth of knowledge.
Thanks, Nasa. Thanks so much for having me today.
Fantastic. And so, Meghan, I don't know if you heard the opening part of the show where I sort of started to talk about personal story and, the gaps in the health sector and basically how, for me, it's important that we talk about these things and see how we can actually fix the problems, as it were, or close these gaps. And that's the reason behind the topic of discussion today, which is essentially the road to Africa's development and considering impact investment as sort of the solution in terms of financing challenges that have been identified. So without further ado, and let me jump right into starting the session, can we just start with a bit of context setting? So what is impact investing all about? And how is it different from normal investing and ESG investing, which is the environment, social and governance investing, or sustainability investing, as I call it?
Yeah, thanks, Nasa. That's a great place to start. And I'm sorry for the loss of your aunt. I was listening in the earlier portion, and I think COVID has been such a reckoning across the globe, I think, where people are asking, as you said, what's our role as individuals in some of these bigger issues? Mm-hmm. And if I kind of use that to segue into, defining impact investing, I think when we look at a development gap like healthcare, charity or traditional aid would say, like, let us just build this healthcare clinic for you without really the consideration of how it would be funded or staffed or supplied 5 years from now. It's kind of a one-time solution.
Right.
The traditional private sector operators would say, let's build a hospital in Ikoyi or in BI where we know that we'll have customers with a high ability to pay. And social entrepreneurs, who are ultimately the enterprises that impact investors are focused on, are filling a gap to say, what would it take to build a network of affordable healthcare clinics, some in urban areas, some in rural areas, with mixed income clients, so that you can create access to healthcare for, for lower income populations as well as those with means. And impact investors are really looking for enterprises like that, where the priority is achieving a social objective, but we recognize that it has to happen alongside financial sustainability or some financial returns. Yeah. To answer your question in terms of how impact investing differs from traditional investing or ESG investing, I would say that they're on a continuum. The traditional investors have profit as their primary objective. The ESG investors are still prioritizing that, but they may be using some filters around environmental parameters or social parameters to determine, whether or not they want to make those investments. Right. And impact investing is really the other end of the continuum, where they're prioritizing the social outcomes alongside the financial returns.
Fantastic. And so with that definition and understanding that, impact investing is more around prioritizing social returns, do you see that in Africa, understanding, I feel like, I don't know if it's just an African thing, like we're so profit or return oriented that it's almost hard to see that anybody would be keen on the social returns over the financial returns, right? But then they say there's a lot of opportunity in Africa for impact investing. So what's your experience working in Africa with the impact investment landscape and the openness or the openness of investors to this sort of investing, if you like, to this approach of funding?
Yeah, it's a great question. And, I think what's interesting is that impact investing really tries to, or has an opportunity to be a bridge between what you might typically do with your philanthropy, and what you might typically do with your capital that you're using for investing and generating returns. And so if you're thinking of an alternative for what to do with your philanthropy, then impact investing offers a great opportunity, because it's it's solutions that will sustain longer term and ultimately have the possibility to deliver multiples of that impact. If you're comparing it to your traditional investments and you're seeking those same returns, it can be a more difficult proposition. Right. But there's also a range of opportunities within impact investing. I think there are certain sectors that are lower risk and where you can have returns that are closer to market rate, and others where it's going to need to be something concessionary and might be closer to thinking about what you would do with philanthropy. In Africa, I think even philanthropy happens a little bit differently. It's closer to home. It's closer to, the people in your extended community. That's right. And so it's not only about how investment happens differently in Africa, but also about how philanthropy happens differently. And I think we just have to continue to, highlight the examples of where we see this working and where there are opportunities. The second piece of it, I would say, is that, and this is where I think there's really an opportunity within impact investing and even social enterprise, that, there are opportunities even within more traditional enterprises to think about the impact that your business is having. Are you paying your lowest lowest skilled employees a living wage? Because at some point, part of us someone is creating the problem of inequality.
Of course.
And so we can only work on the solution over here, or we can also think about like from the outset,
yes,
what's our contribution to that? And then are there ways to operate even more traditional businesses that think about inclusivity and think about using the business as a vehicle for creating positive social outcomes as well.
Fantastic. That's interesting. You know, it's funny that you say this because earlier when COVID started and when I started Social Conscience with NASA, which was the articles, I had written something about how the organized, maybe COVID would force the organized private sector to be more socially conscious or conscientious, if you like. And so that maybe impact investing would be the way forward. And to my mind and to what you said, you know, it's not necessarily saying I want to do impact investing. Even in your normal business operations, you can start to think, you know, more about how you're impacting, even through your employees, right? You know, am I paying them, as you said, the minimum wage, etc. And so my question then is, in terms of how impact investing is seemingly structured, intentionality and measurement is very key, right? So if I'm not intentionally setting out to be an impact investor or to say that this is what I'm doing, and I don't have the framework to measure the extent of my impact, but somehow, somewhere, I'm doing the right thing, then does that take me out of the equation, or am I still contributing? I just need to be, you know, put in that structure, or given a framework to then sort of, say I'm now doing my bit as an impact investor. I don't know if you got that question. It was a bit of rambling.
I'll take a stab at it, and then you can let me know if I've gone off track. Sure. I think, you know, one thing is that there are such a range of impact investors that there are some that may, you know, look at more traditional businesses and say, hey, you're creating jobs and you're driving economic growth, and that's enough impact for us. And so we're excited to invest there. Okay. Acumen has a more narrow definition where we specifically want to look at businesses that are impacting low-income populations, either by improving their livelihoods or by creating access to goods and services. So we have a narrower lens, but there's a range of how different impact investors even define and measure that impact. And I think that creates opportunity, as I said, for a wide range of things. From an entrepreneur or like a company perspective, if you're trying to think with more intentionality about what the positive impact of your business can be, you know, put the investors aside for a second. That's really talking about a transition from thinking about your CSR as like the thing you do on the side to part of your business strategy and integrating that into your overall. So, you know, if you're an oil company, rather than donating to an education program or a scholarship program, what are you doing to take environmental responsibility for the impact that the company is having, right? It's kind of connecting things more to the core operations of the business and the positive or negative impacts of the business and trying to mitigate those. There are some great frameworks and tools that have been developed. B-Lab is an organization based in the US, but they have a global certification program for companies that want to certify as benefit corporations. And these are companies that have this intentionality to be a vehicle for positive social impacts. And it sets a framework, whether it's your employees, your suppliers, your customers, your environmental footprint, and gives them different tools to self-assess and then work through, you know, what are the criteria that they have to achieve to hit the certification. I know the certification process is kind of lengthy and cumbersome and maybe a bit pricey, but at a minimum, it provides that framework and some of those options to think about how you might apply that lens to your own business, regardless of what that business is.
Oh, that business is fantastic. So you did answer the question. I didn't ramble after all. Okay, that's interesting. And that takes me to another question around small businesses, right? And I think that when people hear impact investing or they hear, you know, making a difference in society, they sort of leave it to the large corporates and think, you know, I'm too small to do that. But I think that as the world is evolving, and as we've seen with COVID, you find that I think everybody has a role to play: individuals, small businesses, large corporates. So a B Lab, for instance, has the frameworks and all of that to help you get started. As you've mentioned, it's probably not affordable and it's probably lengthy. And I think that that's also sort of some of the things that pushes people away. Can we find an alternative that is better suited for small businesses so that they too can start, and then they become those large? So it's sort of ingrained in you from the start, and it's not something that you're just layering on later in the future. So is there anything that we could consider? Is Acumen going to probably think...
Well, this is a great question. I wish we were having this interview a few months from now, but I'll tell you anyway. Which is that I had a conversation, I guess, probably more than a year ago with Kola Aina, who's an investor and runs an accelerator ventures platform in Abuja. And he was saying, like, Acumen does all this impact stuff. How can we bring that lens to the entrepreneurs that we're training, regardless of the sector that they're in? And so we started to really think about this and work on this. And we're just now launching a pilot for a course that we're calling like Practices of Inclusive Business, that would give these entrepreneurs, just as they're coming out of the gate, a chance to reflect on their values as entrepreneurs, the values that they want to see manifested in their business, and then to go through the different stakeholders that they interact with and whether their business activities are having positive or negative impacts on those stakeholders. So it's not a robust framework or a proven framework as B Lab is, but it's exactly to this point of how do we catch them coming out of the gate and at least help provoke an awareness or some curiosity about how to apply this lens in building their enterprises.
Fantastic. I think it's a good place to start. It may not be as robust as B Lab, but at least then people are woken to that consciousness and know that we have to start thinking about these things. And then as they evolved, I guess B Lab to probably have options for smaller businesses in the future. Okay. Yeah. So, the Sustainable Development Goals, Africa, development issues, they talk about the funding gap for the SDGs still very wide, and impact investing has been seen as the route to filling the funding gap. So it's pretty much the idea that private sector, as has always been said, it plays a very important role in filling that gap because government can't do it all alone. And so in that sense, right, do you agree that impact investing is that solution to the financing gap, or it's just one of the numerous ways? Yeah.
I guess, again, I have two answers. So one is that I don't think impact investing alone can be relied on to plug that gap and to plug, and we recognize this. Acumen's been investing in early stage social enterprises for it'll be 20 years in April. Wow. And when we watch the different struggles that our companies faced in trying to scale and trying to solve the social problems that they were after, whether it was access to clean water or healthcare, we realized at some point that, these entrepreneurs don't exist in a vacuum. Right. They have to import their products. They have to move them across the country. They have to have a payment platform, and you need that infrastructure and you need that regulatory environment to also be as favorable. There's an example I've used before of a company we invested in Ghana that was selling solar home systems. I think they paid 12 or 15 different duties on the solar home systems to import them. And so by the time you get to northern Ghana, where there's the lowest energy access and the highest incidence of poverty, it's very hard to sell that at a rate where you can a price where you can even break even. My point in all of this is that it's going to take stakeholders from each of the different parts of society to all be on board with the shared objectives of closing the development gaps, not just that like we can continue with business as usual over here and the impact investors and the social entrepreneurs will solve all the social problems for us. You know, we need government, we need the private sector, we need the aid agencies, and we need the social entrepreneurs and impact investors to each be taking kind of their piece of the ecosystem that can make some of these solutions work and be brought to scale. The second part of the answer that I was going to say is that sometimes, you know, in an interesting way, we've become so fixated on the SDGs and solving the development goals. And again, I kind of come back to like, instead of interrogating how we got here in the first place, which is obviously a long and complicated answer, but how are we also asking ourselves, like, where are we contributing to the problems that create the need for the development goals? And so then I come back to some of the things we were talking about earlier about, you know, general business practices, and where not creating inequality and not creating poverty in the first place becomes part of the answer.
Interesting. So you mentioned aid agencies, and I thought that, you know, the whole idea of impact investing is to move away from aid, right? So everybody sort of says we don't want aid funding anymore. Let's do value creation for money, etc. So what's the aid agencies got to do in this? And what's their role? Come with patient capital? Is that it?
I think you expected me to say that impact investing should solve the whole thing.
That's what I was hoping, no, like the Messiah.
I mean, look, I think there are... that's probably what I should do, but I can't honestly. Honestly, I think we
with
need
what
everyone,
you know.
and so that has to be, No, look, I think the role of aid agencies, there are, you know, market-based solutions can only work from like a certain point of economic development and up. You know, solar lanterns are no good if you're not getting to eat at least 2 meals a day, or you're not, you know, it's kind of aligned with that Maslow's you know, the hierarchy of needs.
Basic needs,
so market-based solutions are only ever going to be able to pick up from a certain point forward. There's still in that humanitarian bucket, in that basic, you know, those like very basic needs that, yes, we don't want it to be the case that we need those types of solutions for an eternity. But the reality is that for where we're not all at a starting point where solutions you have to pay for are a reality. And so I think, you know, the same way that there's like a continuum of impact investing, I think there's like a continuum of development problems and finding that we each play to our strengths and that we each play in an appropriate role and not actually try to solve the whole thing is what I kind of see as the optimal.
Makes sense. Fantastic. Well, thank you for that, Meghan. Okay, so impact investing is actually not the messiah as I thought. Okay, so if we're talking about investment opportunity areas in terms of development in Africa, I think I know the basic ones, but I'd like to hear from you. Where do you think the opportunities are, and, you know, should I say like low-hanging fruits for anyone who's looking to base?
Yeah, I would say there's no such thing as low-hanging fruit.
Why not, actually?
I mean, let me say that, look, I think the off-grid energy sector has done tremendously, and that maybe right now would feel to folks like a safer entry point because there are some proven models that we know work. A number of companies that have really taken those models to scale in terms of pay-as-you-go solar, and really providing a growing range of solutions, now getting more into solar pumps and things for productive use and for agriculture. On the flip side, I would say agriculture is, you know, it feels like in the development sphere, a nut that people have been trying to crack for a really long time in terms of lifting smallholder farmers out of poverty. And as climate crises continue to escalate, that, you know, those efforts are those forces are pushing things in opposite directions. And so I think agriculture, especially when you're talking about primary production, when you're talking about, staple crops and things that will be used mostly for domestic consumption, those are high risk endeavors. Realizing those changes in income for the smallholder farmers is a multi-year effort. And then I think, and those two sectors, I should say, are where Acumen has done most of its work
so
over
energy
the last couple of years.
And agriculture.
Energy and agriculture, the ones that come after that, healthcare, education, there are also like a number of opportunities there as well, and then financial inclusion and financial services, I guess, to round it out.
Okay, so what are the return profiles like for these sectors? So in energy and agriculture, do you have any sort of fair idea?
That's tricky.
It's okay if you don't want to say.
No, I mean, I just think let me say what the return profiles depend upon. Because I think, as I was mentioning, with agriculture, for example, if you want to do like aggregation and processing of high value crops that are going to be exported and you can get a healthy margin, then you're looking at a higher return profile than, say, if you're trying to do rice, which is or maize, which is local. There's not much value add in processing rice. You're kind of milling it and then it's ready, and so there's less room in those business models to be able to make some outsized return. With renewable energy, I think you could find examples across the board. A lot of the solutions, as I was saying, in renewable energy that are based on pay-as-you-go models. We've seen companies grow exponentially, but they're trying to have those loans repaid over a 2 or 3 year time period. And so making sure that the credit management is being handled well and the repayments are going to plan is a big part of then what drives the return profile for those companies as well. And I'll just say the other reason I was kind of chuckling is that Acumen makes equity investments with patient capital, and part of our whole value proposition is that we're not on a fixed time horizon to realize those returns, because we know that operating in challenging environments over a long time horizon, or with low income customers can be challenging. But it also means that we haven't realized returns from so many of our investments. We started in West Africa in 2012, and so we're actually still holding a stake in quite a number of companies. And that's 9 years. And so to be determined in terms of,
but
watch this space.
Watch this space, absolutely. But people actually complain that part of the reason that a lot of the business or small businesses don't get funding is because there isn't enough patient capital, right? And so do you agree that this is the case in Africa?
Yeah.
Really? And I was going to ask a question about local investors as well. Do you see that local investors, because people say there's a lot of money within the system, but it's just not they're just not interested. I don't know if that's the case, or they don't see the value, or they haven't bought into the idea that, you can make money and still solve important problems.
Yeah. I'll choose my words carefully here, because I think you either come out blaming the entrepreneurs or blaming the investors, and we want more of both. But no, I think that sorry, I just lost the first part.
So the patient capital, do we have a lot?
Oh yeah. Yeah, no, we need more patient capital. That part I'm clear on. So if I don't come as a messiah for impact investing, let me come as a messiah for patient capital. Because I think reckoning with the fact that there are trade-offs in making some of these investment decisions. It's not, impact and financial returns are not always so directly correlated that they run together.
Right.
And I think there's been an oversimplification in some instances, where everybody like do well by doing good, and you can make as much money as if you were doing regular investing, but you're going to also have the impact.
Yeah.
And I think that just oversimplifies what, those choices. If I go back to the same renewable energy example, if returns are your priority, you could be selling solar systems in Lagos and, not worry yourself, not stress yourself, running all around the country and going to the most remote areas.
Furthest.
There is a physical cost, there is quite a literal cost to that.
Absolutely.
So I think, enhancing folks' understanding that there are some trade-offs, but it's not all or nothing.
Right.
There's what do moderate returns look like that are not market rate returns? Or what does it look like to just get back the same money that you put in and then you could redeploy it? So I definitely think there is a continued need for patient capital that can enable innovation and support these companies. I think it's also extremely important just in the operating environment. I mean, the unforeseen challenges are endless. COVID has been a great example, and a great, anyway. The second part of the question was about local investors and the role that they have to play and kind of their understanding. I think I see a mix of things. I think there are definitely some individual investors that are, they see them as those impact and returns always coming together. Okay. And I think it goes back to what I was mentioning earlier, that if it were thought of as an alternative to their philanthropy, then I think it's a more compelling value proposition. It's an easier transition as an alternative to putting money in the market and trying to generate traditional returns. I think that's where it's a little bit more of a stretch. Yeah.
Okay, fantastic. So as you mentioned, as you were talking, I was thinking, why there's so many philanthropists in Africa and everybody wants to give back, and there are people who just feel like, I'm at this stage of life where I just want to make a difference. So it's interesting to know that those kind of people, yet we don't have enough people funding these sort of social impact projects. So I'm just trying. So is it an awareness problem, or they just don't understand? And so, like you said, it's a compelling value proposition for them. Like, look, you want to give for nothing, but you can actually you can give and get something in return. And understanding that the financial returns aren't your priority.
Yeah, I think it is. I think awareness is definitely part of it. And I think there is, within African philanthropy, we were talking earlier about the, giving to your community or the people close to you. I think the next layer of it, and what we see a lot of at the corporate level, is something physical, here's a school, or here's an event, or here's a COVID isolation center. Here's a COVID palliative. But if you're looking for investments to train health professionals or to do some of the work that's less visible, but that would have a longer term and a more sustainable impact, I think there's a shift that we need to encourage in that direction, in terms of just also trying to move from things we can touch and put the company logo on to things that can have a more sustaining impact over time, but maybe in a less visible way.
Wow. So it's funny that you mentioned this, because I've seen this happen firsthand, and part of the things I've seen is I wonder sometimes if companies, for instance, are actually really interested in making a difference, or it's just a PR stunt just so that it's seen that we're doing good, as opposed to we really want to do good. And so is this common across Africa, or is it just in your experience, or is this just a Nigerian thing, would you say?
I've spent more time in Nigeria than in any other place in Africa.
Okay.
So
you can only speak to Nigeria more. Okay.
It's skewed. That's
fine. Okay, so this is a Nigeria factor. So I agree with you because I've seen that happen firsthand as well. Okay, so just speaking to the opportunity of impact investing again and seeing why it's more attractive. So I have this question around the United States seem to be embracing impact investing more than strategies such as ESG and exclusion of best-in-class approaches. However, the assets under management are not growing compared to other strategies, right? So you find that the ESG and other forms of funding are accruing more sort of funding or funds and under management on compared to impact investing. But then the irony is that it's what's been embraced. So what's the rationale behind this? Why would the US be embracing impact investing over these other types of funding approaches?
Yeah, that's an interesting one. I think part of it has to do with, it's been building a field around impact investing, I think has been required because it's more of a departure from traditional investing than ESG is. But at the same time, it's also been really focused on startups in a lot of ways and social enterprises that are kind of up and coming. Right. And so the assets under management are necessarily
lower value.
It's a bunch of very tiny ticket sizes where the tools of ESG are more often, can be applied to fund management and larger asset classes, looking at pensions and what they're investing in, et cetera. And so it's not exactly apples to apples, I guess I would say, in terms of, because I think impact investing is in many instances, although this is shifting and it's growing, but in many instances, the first thing people are thinking of are these kind of early stage social enterprises rather than retrofitting big corporations or the like.
Right. Fantastic. Okay. So since COVID, right, do you think that you've seen a shift in attitudes towards impact and investing in Nigeria, since that's where you have the most experience? Do you think you've seen any change in attitudes? It's just a year. Is it enough to even say you've seen?
It was a long year.
Very long, actually. For like 10 years.
Yeah. No, there are two things I think that reflect a little bit of change in impact investing, but also an increased willingness to collaborate in this sector. And so I guess pretty early in the pandemic, Acumen joined with two other angel investors, again, Ventures Platform and Lofty Inc. And we decided to pool funds together across the three entities and jointly issue grants to a number of companies that we knew were promising social startups that we wanted to make sure made it through this period of COVID. And for Lofty Inc. and the team at Ventures Platform, impact is not their primary screen. But in the context of COVID, it felt like those were the companies that they wanted to be able to support and see through, kind of make it through this period. So I think you could see them kind of leaning into the impact definitions, and that, they're already investing and each of them in their own portfolios have a number of social enterprises and then a number of more traditional enterprises. But it was interesting to see that, one, to be willing to share funds, and two, to lean more heavily into the impact side of things was great to see. And then now there's some coordination happening for trying to raise a larger pool of emergency funds from different impact investors. And there's been coordination on behalf of a couple of different groups to be able to try to pull that together and support the ecosystem. And so I think on one hand, people are leaning into impact investing more, and also more willing to collaborate or kind of combine forces, which is great to see.
Great to see. Fantastic. So that takes me perfectly to the next question, and it's around the impact investing ecosystem, and just, who are the key actors in this ecosystem and what are the main challenges they're faced with?
Yeah, I mean, this is again a lot of the the entrepreneurs would say that the investors don't understand and have too many requirements, or that there's not enough capital. That there's not enough capital, and then the investors would say there aren't enough investment-ready businesses, and that the quality of pipeline is not strong enough. So I think both things can be true. Right. Interestingly enough, and so. Yeah, I think the work in the ecosystem, on one hand, I do think there's like capacity building work or support. Let me say support more than capacity building, because there are a number of super talented entrepreneurs out there with solutions to different problems that just haven't had the exposure of pitching to investors before and, navigating term sheets and things like that. Right. And so an ecosystem that can provide more of that support is critically important. And then on the flip side, I think it's really important for the investors to recognize, what it takes to meet some of these enterprises and entrepreneurs where they are. Right. And not apply Silicon Valley expectations in a Nigerian context. And I mean that both in terms of returns and in terms of documentation and process and, all the kind of hoops that you make them jump through. This is something at Acumen that we've been trying to get better about, just thinking about, how we make it an easier process to, determine the companies we want to invest in and make it happen more quickly and not be quite so onerous in terms of technicalities and paperwork. I think there's more room for improvement for us and, for others in this space as well.
Okay. Interesting. When you talk about jumping hoops and, for the investors, sort of the screening process to invest in a business, are these local investors or are these foreign investors? Could that be the problem because they're not local to understand the peculiarities or nuances of the local business owners?
Yeah, a lot of them are foreign investors. A lot of them are also large institutions that either because of who their LPs are or how their fund is structured have more bureaucratic requirements, let me say, than, your angel funds have a lot more freedom and flexibility. They're also managing smaller ticket sizes, right? But you kind of see things get more complicated as you move up. Yeah.
Okay. So my point with that question is, so if there were more local investors, maybe the kind of complaints that we're getting from the supply side would be quite different. It wouldn't be that these businesses. So, and it only stands to reason that if you're used to a certain type of quality of businesses, then your expectations will probably be that. But unfortunately, this is what it is. So would the solution then be to sort of try to make them understand, but that has to also be them willing to sort of almost saying lowering their standards, right? So how do you tell someone, you've got to lower your standards because you're in Nigeria? Is that what the pitch is?
No, and I wouldn't say lower your standards because I don't actually at all think it's a question of quality. I think it's packaging and language in a lot of instances.
Okay. So it's the local nuances.
And so you're expecting like a nice deck with 10 slides, everything is laid out the way you want. And what you need,
make it crisp.
Is an entrepreneur who's running a really stable business. They've demonstrated year-on-year growth, but the way that they might present that story or present the future of that company would look and sound different than what you're used to. That's one layer. And the second layer is on actual documentation in terms of record keeping and is the company registered in the right way and have you are your taxes up to date and all of those like more compliance oriented things, I would say. That there's also like a heavy burden on that side. I don't know that goes away, but it's not a quality of the business or quality of the entrepreneur question. It's being able to manage through those processes and through some of those systems.
Okay. So is that's why, the likes of CC Hub exist, right? So I have a younger brother who started off some innovative business idea and he had to go through the CC Hub and they sort of handheld them through that whole process of structuring the business. And I suppose there'll be also some sort of capacity building around pitching to investors. And so the role of those sort of organizations like CC Hub, do you think that's made a difference in the landscape, do you think?
We have a really vibrant ecosystem, like startup ecosystem in Lagos, which is great to see. I think one of the things we're starting to observe as we're working with the earlier stage companies is that those programmatic interventions, whether it's an accelerator program, an incubator program, those can kind of take entrepreneurs to a certain point. I think there's actually a need that comes after that that's a little bit more customized support, and where we've seen there are a few investment advisory firms that you can get a grant to get a team to work with you individually, just because each business is different, the challenges that they're facing are different, the types of capital that they're raising are different. And when you go through a 2 or 3 month program, you know, your learning happens in that window and then it's over, whether or not you've solved all your challenges. And so I think, you know, if I were to, like, speaking to the ecosystem players or the funders that fund some of those programs, I think we also need to look at some more customized approaches to be able to really double down with some of those companies kind of after they've done the classroom part of it or those initial early stages of building. But I think CC Hub, I think all of the, you know, Passion Incubator, there are a number of great incubator and accelerator programs in Lagos that are really helping everybody get out of the gate in the first place, which is also really important.
Okay, fantastic. Okay, oh, wow, time's gone. We've just got a couple more minutes to go. Okay, so I was going to ask a couple more questions. So one is around, you know, I mentioned earlier that one of the key elements of impact investing, to my mind, is measurement. So, and there's so many approaches to measuring. So, and there's been talks around, you know, maybe there should be like a standard framework for measuring impact. Would you agree that this should be the case?
I think we have a ways to go from where we are in terms of measuring impact. I don't know that we'll ever get to fully standardize. And part of that reflects what we talked about at the top of the conversation in terms of the range of impacts that investors are even looking for. So there is an organization called the Impact Management Project. That is working on exactly this, trying to build global consensus on how to measure and manage impact. And it's a coalition of different impact investors and impact measurement firms that have come together. And so they have identified, I think, 5 core criteria that they help social enterprises track and are trying to push adoption of that. So things are definitely moving in the right direction, but there's a way to go.
Just ways to go. Are you able to share what those criteria are? Do you have any idea right now?
I don't have them in front of me. I know we use 3, and I know that 3 of theirs align more or less closely with ours. But the three that we use are poverty focus, which is just to say what's the percentage of customers that are living below the poverty line, because that's Acumen's, you know, particular focus in terms of who we're trying to reach. The second is breadth, which is just to say what's the scale of the company and the number of people or the number of households that they're reaching. And then the third is depth. And depth for me is the most interesting one, and in some ways the most important one, because it's a series of questions that try to assess like how meaningful access to a given product or service was on the customer's quality of life. And it's as dictated by the customer themselves. So how do you compare having access to a solar lantern to working with a company that doubles your income? Like, those are going to be different in terms of how meaningful that change is to me in your day-to-day life. And what we see in some instances is that it's easy for some companies to do well on breadth and do well on scale, but they might be lighter on depth. And then others can go really deep on depth, but might have a harder time scaling. And so we don't have a specific formula. It's kind of looking at those 3 criteria in aggregate and seeing what the impact thesis is and what we can expect from the company over time.
So you wouldn't say that one of those 3 carries more weight. It's sort of just basically saying that you can touch on any of these, right? Fantastic. Well, Meghan, it's already 7:30 and it looks like I can't actually ask my next question. So just before you go, what would you say is the key thing that needs to happen for impact investments to thrive in Nigeria?
I think we need more patient capital that is impact first and realistic about return expectations. So if we can bring more of that philanthropy into the impact investing space, I think that's definitely one. And I think the other is to continue to use the impact investing community and the social enterprise community to influence and kind of create a sense of urgency around having a positive regulatory environment and easing some of the other operational burdens of operating in Nigeria.
Fantastic. Thank you very much, Meghan. It's been an absolute pleasure having you. Time has gone by very quickly. I actually had a lot more questions to ask, so it looks like we're going to have you back on the show. But thank you very much for shedding light on that. Everyone, it's been an amazing time with Meghan. We have to round up now. Thank you very much for listening. Please tune in same time, same station next week as we bring another exciting conversation your way. I am yours conscientiously. Africa is rising, they say. But Africa must rise with its people. There is no Africa without its people. How then do we harness Africa's wealthy people? Through social change and development. Social Conscience with NASA commits to Aspiration 6 of the Africa Agenda 2063 and the Global Development Goals. We advocate social change and development that will inspire the transformation that keeps Africa rising. Join us every week at 6:30 p.m. GMT +1.
You're listening to Africa Business Radio, where you get up-to-date insights on the Africa business landscape. Log on to www.africabusinessradio.com. Your favorite shows are available on podcasts. Download them on our website and mobile app. Africa Business Radio, towards a profitable Africa.